Welcome to today's webinar on Alkami's top 5 trends in business banking for 2025. For the third year in a row, the Alkami business banking team has identified what we believe will be the top 5 business banking trends that will help shape the financial landscape in 2025. Today, we're going to have a conversation around those trends with a few of our esteemed clients. We'll first talk about modernizing processes through digital innovation. This is mostly centered around using innovative technologies to improve the way an FI operates and how it enhances the client experience. We'll then discuss leveraging data analytics to drive personalization for business clients, reducing potential risks to the FI and aiding in bringing in new business opportunities. Next, we'll be talking through how to reduce risk and prevent fraud, a topic that will always be on the forefront for any FI, regardless of technologies used. But as innovation continues, so will the risk and the fraudsters. Let's see if we can stay one step ahead of both. We'll move into a discussion on building profitable relationships and what that looks like for different FIs. It may not always be the same thing, so exploring this topic should be exciting. We'll end with some insights on centralizing cash and managing liquidity for business clients. As treasury management folks and bankers, this is something that is essential for providing lasting relationships with your business clients. My name is Mandy Lopez, and I'm a product manager lead with Alkami. I'm joined today by Samantha Paz, Senior Vice President and Chief Innovation Officer of Mascoma Bank, Kyle Guest, Vice President of Business Banking with Mountain America Credit Union, and Jeff Lusak, Vice President, Cash Management Manager of Landmark Credit Union. Thank you all for being part of this conversation today. Starting with the first trend, modernizing processes through digital innovation, we feel that digital transformation is reshaping business banking by streamlining operations and enhancing client experiences as a result through AI, automation, and cloud-based digital banking solutions. Samantha, let's start with you. As Mascoma Bank's Chief Innovation Officer, I'm sure this has been a topic of interest to you. What has your bank done to provide a customized experience to your existing clients, or how have you guys used innovation for a smoother onboarding of new clients?
You know, Maddie, we've taken steps towards adopting tools of like artificial intelligence and automation, and we're starting to implement a lot of those, but we're really being very intentional about how we approach it. So for us, it's not just about jumping in, it's about laying the groundwork to ensure we're doing it responsibly and effectively. Over the past year, we've been really thinking about how do we bring in artificial intelligence to help us leverage data analytics in a better way, and we've really focused on setting the foundation for this work. Before we can use AI to improve customer experiences or automate processes, we really need to ensure we have the right structures, governance, and most importantly, access to the right data. So really for any bank, I think the foundation of leveraging data analytics is having access to data, and this can be a challenge for many of us. We're looking at ways to address it. Over the last couple of years, we've been on this journey to rebuild our technology stack to enable us to holistically access data across multiple platforms. Equally important has been the investment we've made in our team. So over the last year, we really focused on upskilling our innovation team to ensure that they have the tools, the skills, and the knowledge to harness data analytics effectively. We have built a roadmap, and we're just starting to really execute on it. It's focused on leveraging data. We want to be able to build actionable customer insights. We're looking to drive growth and expand customer relationships. And we're also really focused on supporting our customers' financial wellness. Our goal is to create hyper-personalized, actionable insights, not only to expand customer relationships, but also to enable them to thrive financially.
Yeah, and you're so right, Sam. I think, laying the foundation first and making sure that you've got all the pieces in place and you've got all the people in place that you need to do that is paramount. That you don't want to just throw something out there and hope for the best. So
yeah. And Mandy, to kind of add on to that, I mean, we've really taken some deliberate steps to put the right practices and guardrails in place for using AI responsibly. So really, that's what we've been focused on over the past year, and we've really built this kind of high-level data and AI policy, but we're following that up with some structured principles, guidelines, and practices. And basically, they're the guardrails that we think we need we know regulators are going to come in. They're going to ask us tough questions. How are we using the tools? How are we monitoring them? How are we ensuring accuracy? And we want to be ready to confidently demonstrate that we're using AI responsibly. Our next step is, and this is what we're just starting to embark on, is creating a task force of stakeholders from across the bank. It includes risk, technology, innovation, some of our lines of business. We want to ensure we're addressing not just the technology side, but also the operational and regulatory side of AI adoption. This way, when we do roll out AI-driven solutions for personalized analytics or streamlined onboarding, we're doing it thoughtfully and responsibly. Ultimately, we see this journey as an opportunity to empower customers, but by combining robust data access, advanced analytics, and tools like AI, we're really positioning ourselves to deliver a customized, proactive experience that truly helps customers.
Yeah, that's incredible. That's great insight. Thank you so much.
Sure.
Jeff, how about for Landmark Credit Union? What are you guys doing to further your digital innovation?
Yeah, I think we're doing a lot of, what other financials are doing. We're trying to increase the use of conversational banking with the use of chatbots. We're trying to enhance our digital onboarding with marketing inside and outside of digital banking, being able to make sure that people are aware of the products and services we offer and making sure that gets out there in a more automated fashion. And then, last but certainly not least, looking into digital account opening for business accounts. That's kind of the brass ring that I think a lot of financial institutions are aiming for in their business departments, a way to digitally allow our business members to open accounts with less involvement from the bank so that they can, or the financial institution.
Yeah, I think that's a great idea. And I won't opine on my days spent in banking, but I remember when consumer digital online account opening really became a thing. And then we started to get into business, and there's so many different rules and regulations and requirements to open a business banking account versus a consumer retail account. So I think you're right. I think that is the right way to go. And, to really offer those personalized experiences. And, banks have menu boards of products and services, but to be able to really show those to the businesses that could use them the most, I think that's incredibly impactful. So thank you. So Kyle, for Mountain America Credit Union, you guys are about $21 billion in assets, making your FI the 9th largest credit union in the United States. Congratulations. Cloud-based banking solutions is probably something you guys have invested in to be in the top 10 of the nation. What can you tell us about that journey? Where are you guys at today? And what does your FI have planned for the future?
Yeah, thank you, Maddie. We have traditionally, I think most financial institutions have been hesitant to partner with fintechs. There are a lot of great fintech companies out there. Some, I think, most are impressed with the technology that's offered, but they're skeptical about data and security and that infrastructure, on behalf of their customers and members. So, recognizing that there are a lot out there with strong, safety and security, strong SOC 2, strong infrastructure there. There are a lot of opportunities that we see on the fintech side on partnering with them. We fully embrace that. And we use that as a tool right from the beginning of a relationship. Like Jeff mentioned, we are working to automate that first experience that a business would have with Mountain America. So right at account opening, and that not just account opening, but online enrollment, cash management enrollment. We want to make that as digital and automated as possible. Now, certainly we pull back a little bit when it comes to full self-enrollment for new business account opening. We have not figured out a way to reduce fraud on that. And I think most banks are in that same boat, but as soon as we certainly strive to have that full automated onboarding.
Awesome. You touched on something, Kyle, that made me have a thought in my head. There was a hesitancy to partner with fintechs, and I think there's still some hesitancy out there. But as you were talking about that, you were saying that you guys have to make sure that partnering with a fintech that they're doing everything they can do to keep that customer data safe too. And it's kind of like a prove it. We have to make sure that we have that trust established, and that whomever fintech that you guys partner with is being SOC compliant or keeping that data secure. And if it happens to go up to the Amazon cloud or some other cloud technology, that data is being kept safe, because ultimately it really comes back to you, the FI, to maintain that security, and your clients are looking to you guys to make sure that you're partnering with the right partner. So that makes total sense. Okay, let's spend some time talking about our second trend, data analytics. Predictive modeling, real-time data analysis, and the like. Sam, when we think of data analytics, what comes to my mind for banking is the ability to use data to predict outcomes, reduce potential risk, and use behaviors to drive new businesses. How has your FI leveraged data analytics?
I think, Mandy, we've got this vision of, getting the right information to be very right at our fingertips to really help support our customers and be much more proactive than we are now. Right now, customers identify a problem, they come to us, we solve the problem. And data analytics can really change that game into a proactive approach, where we can see before they see it, an issue that's coming down the line or something that's changed in their finances that we can react to quickly and reach out to them. So we've built this team of, it's a cross-functional team. We've got somebody who's focused on data analytics. We've got somebody on the technology side to help us build insights and connect data. We've got somebody on the marketing and communications side to build out communications that we can get information to customers on the right time. So it's really, to me, part of the big step is building the right team, getting the right people together to be able to quickly move and help to build the right insights and utilizing the right tools.
Yeah, I love that. I love what you guys are doing. I think that makes total sense. And, kind of as we talked through the first trend, you guys are really putting the right teams in place and getting the groundwork laid. These are new technologies and new thoughts that we're stepping into. And I'm really encouraged by what you guys are doing. So well done. Thank you. So Kyle, what about for MACU? What experiences can you share?
Yeah, the data analytics, as Sam mentioned, is critical. We use that daily. In fact, we have dedicated resources specifically on the business side that are data experts that help mine data, that help uncover gaps and opportunities that our members are facing. For example, if we have businesses that have heavy fluctuations in their cash and their balances, and we oftentimes that go into the overdraft, but they have money in other places, or depending on the nature of their business, we can recommend a line of credit for them to use, and something that they probably have thought of, but just not aware that this would be a good fit. And so we're proactive with that through data to offer those types of solutions. Same thing if they're if our members are doing manual processes, if they're frequenting the branch a lot and depositing checks, depending on where they're located, maybe a remote scanner would be beneficial for them. Or if they're coming into the branch to initiate wires frequently, we proactively mine that data and reach out to them either through automated emails, through marketing, or through a business relationship officer to offer a solution where they can do it digitally from their office. And so, data is critical, not just from the from the number reporting standpoint, from the executive level reporting, but to help provide a better experience for our businesses.
You're so right. And the bank down the street's probably going to do something similar to that too. So by you guys getting proactive with this data, making these recommendations that honestly small businesses may not even know about, is critical to maintaining that relationship and keeping that account with Mountain America and the other FIs as well. So I agree.
Yeah, thank you. And just to add on to that, another tactic that we use on data, we can oftentimes see where our businesses are behaving elsewhere in terms of credit cards, any of the competing cash management solutions, or maybe it's a merchant provider. And if there's an offering that they're using that's not Mountain America's, at least we're proactive in reaching out to them to inform them of what we have to offer, and then they can make a decision to see if what they're currently using is in their best interest, or to pursue a product to deepen their relationship with Mountain America. So,
yeah, spot on. Yeah, that's incredible. Awesome. Jeff, how about for Landmark Credit Union? Have you guys instituted any new policies or practices to use data analytics to help drive either new client relationships or personalized experience to your existing member base?
Yeah, a lot like Kyle stated, we use data analytics to review our members and what they're using, what they're doing on a daily basis to be able to provide targeted solutions for them. Cash management, treasury management at Landmark Credit Union is only about 5 years old at this point in time. So it's also about making sure that our members know what Landmark offers, because sometimes our members are looking for solutions and they don't know to ask us for them. So if we're being proactive and telling them we have the solution for them, that helps all the more in having them choose Landmark as their financial institution instead of one of the financial institutions they use. One of the other things we use for data analytics leads right into reducing risk and preventing fraud. I don't want to jump the topic, but we also use BioCatch to review behavioral analytics of our business online banking users and how they do things.
Wow. Yeah, that's pretty powerful. So I think that's a great segue into the next topic. So Jeff, we'll start with you. As we continue on our digital transformation journey, unfortunately, the fraudsters do as well. Sometimes it's tough to stay one step ahead of them. So talking about our third trend, reducing risk and preventing fraud, can you give us some information on what you guys are doing at Landmark or have done in the past? How do you guys reduce that payment fraud, data breaches to keep your members' money and information safe?
Yeah, like I had just said, we partner with BioCatch, and it does a real-time scoring based on behavioral analytics. So the way that different members interact with online banking, if it looks out of pattern, it can do things as simple as warn the financial institution that something's possibly out of pattern, all the way up to and including stopping a transaction or blocking access to online banking. It's a pretty intelligent tool, and it's worked very well for us. Other things that we use is we use Positive Pay, Payee Check Positive Pay, and then ACH Positive Pay as well. And for 2025, we're looking to institute teller line Positive Pay. As long as there's going to be checks in the system, there's going to be check fraud in the system. And the teller line is a small gap in the Positive Pay armor. And being able to detect that at the teller line when somebody's cashing a check for cash is a pretty strong tool to have.
It is, absolutely. Thanks, Jeff. Kyle, any insights you can share as to how Mountain America has taken measures to counteract fraud and mitigate risk?
Yeah, certainly. I'll add on to what Jeffrey said. We also are a heavy user of Positive Pay. One of the mistakes I think some financial institutions make is that they have a strong Positive Pay offering, but sometimes it's only used after fraud happens or after a customer experiences that. And so they suggest this recommendation. I think being proactive with Positive Pay, having it pushed at your branches or anywhere that team members, employees are communicating with customers, it needs to be brought up. So great point there, Jeffrey, on Positive Pay. A few things, other things that we're doing, and we could be here for days to talk about all the ways we're trying to prevent fraud, as we know everyone's struggling with that. But a few things stick out for us. We have been very strategic with our multi-factor authentication at login. We had some breaches last year where our online profiles were hacked from some of our members. And as we dug into that, and when they were hacked, payments were initiated and sent out. And from our side, it looked like it just came from them. And it did. Where we found the breakdown was on multi-factor authentication. They had email as their primary option. And as we know, most of us, when we log into our laptops today, it does not require a separate login for email. If you can access the laptop, your chances are you can access the email. And we found that that was the case, that when computers got hacked, the fraudsters had access to email. So we deactivated email as an option there and strictly went to text and authenticator app. Great news on that is that we had very little pushback from businesses. We were nervous that some would be mad about that. We certainly had some questions, but very little pushback as there was a good understanding it was there to help prevent fraud for them. The other thing that we're doing is around check sequence numbers. So any check that clears, we have a history of the general range of those sequence numbers on the checks. And so we've implemented a range, and this is completely on the back end. Our members, our customers do not feel this. Whenever a check clears, if it's out of range, we have a set range of 100. If it's outside of 100, it raises a flag, and we notify the member that there's a suspicious check trying to clear. In most cases, it has prevented losses, and we're excited about that small tweak that we have made.
Yeah, that's a great idea. I really like the reduction of the emails as well. I think as we get into this more modern world, you're right. Emails are just so easy to, man in the middle attacks and to be, fraudulently taken over. And now that we all rely so much on our cell phones, going to another MFA validation method makes total sense. So those are some great insights. Thanks, Kyle.
Yeah. And, the last thing I'll add on to that is, again, we can talk processes and products and new things that we're trying to do. At the end of the day, the most important thing we have found is customer education. Having trainings, having time set aside to educate them, whether it's through marketing material, through lunch and learns, through virtual calls, educating them on what is happening, that is the most effective way, better than any process we can do internally.
Yep, you are so right. It's that customer education over and over and over. And, the fraudsters tend to rely on vulnerabilities and, getting people into that comfort spot that they just want to give up all of the information. And it's just, you're so right. Trying to stay one step ahead is tough, but it really comes down to trust your gut. Sometimes if it's too good to be true, it is. Sam, how about for Muskoma Bank?
I'm going to add on to what Kyle just said because I think it's really important. And I think we all look at what are all the tools that we can bring into our financial institutions that we can help protect ourselves. What tools can we offer our customers? And I think we need to do that, and it's important. But the flip side of that is exactly what Kyle said. A lot of times, our customers are very ill prepared to understand even how much risk they're taking on or what the risks are. And I know we have a lot of services that we can offer our customer at the time of opening an account. We kind of go through them, or we try to go through them, but a lot of times customers don't pick up on them. And I've been recently doing some interviews with some of our business customers and nonprofits, and I am hearing loud and clear from all of them that they all feel really unprepared to manage security risks, data breaches, account takeovers, payment fraud, and they often don't have the in-house expertise to identify what these threats are or know how to protect themselves. So while we are trying to do the lunch and learns, that sort of thing, reaching out to customers more proactively, we're also looking at how can we help support customers, maybe by using data, identify if they, maybe they're a little ill-prepared in an area, and then how do we provide them with not only white papers and information, but on an ongoing basis, trying to help them understand the risks that they're taking on so they're better prepared as well. So I agree, Kyle. It's not just the products and services we offer. It's really educating our customers so that they can understand what's available to them and what they need to do to mitigate risk.
So the goal of each FI is to not only bring on new banking relationships with confidence through the other topics we've just discussed, but also to create profitable relationships with the new and existing clients. Kyle, what does profitability look like to Mountain America? It may not only be financial profit, but reputational profitability as well.
Yeah, thank you for that question. Certainly, profitability is important for every financial institution. That's what keeps most of us employed. That's what keeps the lights on. However, we all have a responsibility to ensure that we take care of the customer or the member. No doubt we look at products per household and loan growth And those things are often a reflection of how deep the relationship is with your members. But the way that we look at it is a level of trust. Our true profitability is really reflected in how much our members trust us. And that is reflective of how many products, how many services they have with us. If they trust us, there's also a huge obligation on our shoulders to ensure that we have the best products in the market, that we are serving our members, and that we're not only putting the best product, best rates, best terms that we can provide. And by doing so, certainly there will be profitable relationships that come from that, but they will be long-term relationships. Short-term relationships, create a lot of ebbs and flows in the financials. But our goal at Mountain America is to create long-term profitable relationships with low attrition, and that we have gained through trust.
Absolutely, and being that trusted advisor, I mean, like I mentioned earlier, you guys are ninth in the nation, so you guys are doing something right, and I think that really shows. And as we've talked through previously, using that data to help further these relationships, continue that trust, provide that advice, has seemed to serve Mountain America well. So thank you. Sam, how does Mascoma Bank measure profitability?
I like what Kyle just said, and I think credit unions, we're a mutual bank. I think we have a lot of similarities in our structure. So I think it does. We also look at, long-term relationship is what we're looking to build and build profitability over time. However, I will say I think there is a need for us to truly understand customer profitability, and it's one area that we have room to grow on. I think, as I said earlier, having access to data is key, and most banks, I think, we're unable to holistically look at a full customer relationship with all of their data in one place to really truly understand what that profitability is. So we're in the process of trying to see how do we connect that data so we can. But currently, we really look at profitability from the product level. I think we do need to eventually dig down into, based on customer behavior, understand what profitability is from that customer relationship level, because I do think it helps drive decisions. It helps us drive how do we better support our customers. It also helps us drive what our growth goals are and how are we going to get there.
Yeah, absolutely. Totally agree. Spot on. Jeff, what about for Landmark Credit Union?
Yeah, I mean, exactly as Sam and Kyle kind of hit it on the head. With Landmark being a credit union, I'm a recovering banker. That's what we like to say in the credit union space. And working at a credit union changes that idea of profitability. What we're here to do is to grow and deepen relationships, provide solutions that add value for our members. So the only way we can really do that is by making sure that we have those products and services that rival, the big banks of the United States, the U.S. banks, the Chase banks, stuff like that. Making sure that we're able to provide the same products and services for them with that credit union value that comes with it.
Absolutely, and I think partnering with fintech companies has really opened the playing field for the community banks, the credit unions, kind of the smaller banks in the nation, to really be able to compete with those big banks. And I think where all of you have set yourself apart is your service and your relationships and the attention that you pay to your clients and members. Okay, so the last trend I'd like to get your thoughts on is centralizing cash and managing liquidity. When I think of this topic from my banking days being in treasury management, helping clients best position their funds for investment purposes or debt paydown was something that was highly valued and honestly necessary for us to stay competitive in the market. So, Jeff, from your perspective, how does Landmark approach cash and treasury management?
Sure. I mean, we have products and services to help our members with their overall liquidity. We offer loan sweeps and investment type sweeps or repo sweeps in order to help have our members keep their cash in a place that's either earning the most for them or reducing the amount of interest they're paying us on a line of credit. at the end of the day, we're trying to be a member's main financial institution, right? Not just one in the toolbox. So we want to leverage things like same-day ACH, external transfers, integrating data with other institutions, whether that's integrating within online banking or integrating with an accounting system that they may have. We want to be right there. We want to be top of, I think on the retail side, people say like top of wallet. We want to be the main financial. We want to be their business top of wallet, so to speak.
Excellent. Thank you. Kyle, what about for MacU?
Yeah, we're following similar suit to what Jeffrey mentioned. We do invest a lot of resources into our products and our cash management and treasury management products. And not just set them up one time, but we have to continue to evolve and enhance our products to ensure that it's meeting the needs of our members. We always ask the question, is the product that we're offering or talking about or thinking about onboarding as a partner, is it saving time, improving efficiencies, or reducing overall costs? And if it does one of those three things, or hopefully all three of those things, it's certainly something we're interested in to offer to our businesses. The other thing Jeffrey mentioned there at the end about accounting system integration, that's something we constantly look at. We survey our businesses. We ask their preference on how they like to do their banking, where they live most of their day. Most of the time, they live in their accounting system. I'll use QuickBooks as an example. We are, obviously we're heavily in the small business space. Most small businesses use QuickBooks. And when they reconcile or see their cash positioning, it's a huge advantage if we can have a sync from our online banking system, which Alkami does provide, to sync into their QuickBooks. So they can reconcile and see balances and transactions clearing right in their accounting systems. That is a great best practice that we look for in all of our products, but then try to expand that integration into QuickBooks and other accounting system for all of the products that we offer.
Yeah, I think that's a great point. And I'm an old banker, but it used to be kind of software, thick client based, and as we've moved more into this thin client, app based accounting system practices, these people can really just get into their accounting system on the go. They can do what they need to do. They can reconcile. They're able to, hopefully identify any fraudulent transactions that are coming through. So I think you're spot on, Kyle. People are really relying on their accounting systems to be their main support of reconciling accounts, paying bills, holistically looking at their funds. Before we wrap up with our final thoughts, there's a poll on the right-hand side of your screen. If you would like more information or a personalized demo, please select from the available options now. Panelists, any final thoughts you'd like to share?
Yeah, Mandy, at the end of the day, our focus is on supporting customers responsibly and securely. Risk mitigation and security are critical, not just for the bank, but for protecting the trust and safety of our customers. We also recognize the need to view profitability differently, focus on helping customers optimize their resources and achieve their goals. And I really think it's important to have the right focus on governance, security, and innovation, and also strong partnerships like we have with Alkami. And I think that helps us align us on the right path to delivering real value to our customers.
Yeah, I think that this presentation shows that you have to be close to your business members to understand what they're doing, making sure you can provide some security for them and access to the products and services that can rival the big guys, with also keeping a half an eye to the future to see what's coming down the pipeline that we don't know yet, so we can try to stay in lockstep with our members, business members' needs going forward.
Yeah, and the final thought I'll add is, as we look at trends for 25, there's a lot of good strategies mentioned here today. At the end of the day, banking is a personalized relationship business, and businesses especially bank with people that they like. They bank with institutions that they trust. And so continuing to invest in a strong front line that can build that trust, that is likable, and then also following it through with products and that they can trust and know that are top of market.
Absolutely. 100% agree. Thank you, Kyle. Thank you all for your time and knowledge sharing today. This was an informative conversation, and you've given us some great food for thought. Whether it be dipping into AI or reducing risk, you all have provided an insightful perspective on these topics with impactful key takeaways. Alkami wishes all of you a prosperous 2025 and looks forward to your continued success. Thank you.